The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, as we go into yet another wonderful trading day. And what do I got going on here? Well, I'm trying to do 2 or 3 things at once. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And, you know, we've got a market up here that's it's coming off a little bit. We're off 5 points in the S&P cash volume, closing in on 2.1 billion shares on the NYSE. So we're back to volume levels that are fairly consistent for what we saw the previous 9 or 10 months before, let's say the beginning of, let's even say the beginning of November. So we're kind of back to normal run rates. We've broken highs, some on lighter volume, some on stronger volume. We've got a lot of different cross currents in this market. My model says that we have a very small amount of upside, a very light chance of downside. Not a lot of money to be made, especially if you're trading the indexes to go much higher, or probably a lot of other things, but very light risk to the downside. So, it's not one of these markets that's very dangerous, in my opinion, right now. You've got a lot of trends that are basically saying that from Thanksgiving to Christmas, we're probably going to be up 1% on the S&Ps, maybe if it's a miracle, up 2% over all those trading days. So there's not a lot of upside, at least to be had for the moment, which is, as we talked last week, got me looking at individual stocks only and looking for a kind of a game theory on how to play the last 30 or so days of the year. That is, look for stocks that have made bottoms and that are fairly washed out with massive short interest, and hope like hell for a squeeze out here to actually make it worth my time. And we kind of caught one a little bit this morning in the newsletter. We'll see how well this thing goes in the next few days. But a $30 stock that I think can go to 35 or so on a squeeze. I've got a couple other ones out here that are kind of in that neighborhood, a little bit more expensive. I'm going to try to be adding to those throughout the coming week. We also have some longer trends that are coming into play, besides a lot of people not thinking much about trading over the next month, kind of willing to let their hands play out into next year. Part of that is if you get to today in the stock market in a year and you own a stock, the chances of you selling it, if you've owned it for any kind of length of time, are fairly light. People just do not like to sell come into December. Doesn't matter, make the market want to go up, but it does mean that it probably is not going lower. And you get into that, it's pretty much a thing called tax selling, and that is, if you've held a stock for the year, do you want to sell it now and pay the taxes this year? Or do you want to wait until January 1st or 2nd, sell it then maybe, pay the taxes next year? A lot of people will do that. Of course, you also have what is known as tax selling, and that is if you've got a big loss on a stock, but you have a couple others with some big gains, maybe you'll get out of the stock with the gains. You'll sell whatever you can on the loss side of it, the stocks that aren't doing well, and you kind of just zero those out, and that gives you the ability to start all over for yet another year. So yeah, there are a lot of stocks out there that, but normally if you've gotten to this point, the tax selling or tax loss selling is over. The reason why is almost, I'm going to say 90, last time I saw any numbers, 90% of the money or more in the stock market and the equity market is controlled by street names. That is funds, indexes, money managers, fund managers, somebody that's actually taken the test to become a series regulated investment advisor or somebody like that. So they already know the way that the taxes work. But most of those guys finish their books up around December 1st, sometimes as early as November 15th, and sometimes as early as November 1st. Their books will all be done by the end of the year so they can get right on to filing their taxes. That means that 90% of the people that thought that they were going to sell because the stock was on the wrong side of what they're doing, just, they're not going to be interested in it. They're going to let it ride probably through the rest of the year. There just isn't that kind of seasonal trend to drive the market. We're going to talk more about trends today because it is going to probably be a lot like this the rest of the year. And that is the first hour or two, you're going to have some action. We're going to be very light and variable probably until 3 o'clock. Volume will continue to pretty much from December 2nd. What is it here? Let me get my calendar out here. From about, what is that? December, pretty much when you get in about December 2nd, volume every day should decrease a little bit. By the time you get into the 19th, volume will rapidly decline into the rest of the year, where we do about, where I'm expecting us to do about 3.5 billion shares, maybe 3.3 billion shares today. By the time we get into the 19th, my guess is that we'll be doing 2.8. By the time we get to the 21st of December, my guess is we're going to be doing 2.5 billion for the day. By the time we get to the 23rd of December, my guess is that's the Friday before we go away for Christmas. But I'm not sure. I'm going to have to look. That open a half day, or my guess is we're under 2 billion shares by the 23rd. And normally you're under 2 billion shares at the run rate we've been going at all the way through the end of the year. So if you watch that, you see a lot of stocks going up on light volume, which is exactly what happened last year. We had a lot of people not wanting to sell. They looked into the abyss, said the tax selling's over. Let's just let it ride. Maybe we get lucky. Maybe we get a little squeeze started out here. Maybe a lot of rumors about potential buyouts that end up doing nothing. But it is very tough to be short a market going into December. We've got fund buying over the next couple of days, or actually really kind of starting in the next day or two. There isn't a ton of money coming in, but there's enough to at least keep this market going sideways. So I expect a whole lot of nothing in the indexes. All of the action, I think, is going to be in probably individual equities, probably not in the ETFs as much in those sectors, but individual equities, maybe some commodities, and that I will be focusing on until the end. Be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
That it's all just a little bit of history repeating.
On this day in 1995, the national 55 mile per hour speed limit is repealed. People yell and scream, almost as good as Castro croaking. The national maximum speed law in the United States was a provision of the 1974 Emergency Highway Energy Conservation Act. It was a stupid law put in by people that wanted to act like they were doing something. It is thought that after all those years, that it actually contributed to maybe 0.5%, but put a lot of people in cars. In fact, through those times, it is figured that you probably would have spent somewhere of 150 hours longer in the car if you drove anywhere other than around the block. But what a horrible law. On this day, I cheered profusely, and I asked for I Can't Drive 55. Didn't get it. Still got a decent lead-in song today, though. But I wanted a little Sammy Hagar, I Can't Drive 55. But we don't always get what we want. But a nice day out there. And I will always remember this day for two great things. Well, I guess actually Castro died a few days ago. So I'm going to have to figure something that goes with that. But anytime a dictator bites the big one, you got to be happy. Anytime they raise the speed limit, you got to be happy. You got to think that the speed limit was made when my mom was driving a 5,000-pound station wagon that had 4 drum brakes on it. Now, everybody drives a car that's probably half the weight of that. All 4 discs, big discs probably, 11, 12-inch. Not like my big, massive 15-inch ones. But still good enough on this day in 1995. Other things going on. A lot of times we talk about this, and I didn't bring it up prior, but there is the thing called the data dump, and that is if you want to do something and you have to put out documents on it, and you don't want to get the blowback for it, you dump it into a big weekend like we saw. There are a few things that happen. The two major ones out here, I don't have a slide for the second, but I will talk about it just the same. South Africa, Fitch revised South Africa's outlook to negative from stable. In the accompanying statement, Fitch noticed that the negative vision reflects various factors, including political infighting, depressed business confidence, besides some very anemic economic growth. Political risk to standards that governs policy making have increased and will remain high at least until the electoral conference in the African National Congress, December 2017, negatively affecting macroeconomic performance. Of course, one of these countries that had a horrible government and switched it for an equally horrible government. They may not be racist now, but the economy is much, much worse. Not a rousing endorsement for what they went through, but you know what? Communism has been tried for 6,000 years. It is yet to succeed. Everybody keeps believing it will. It does not. And South Africa is probably the closest to a stable communist government that there is, but still communist, which means they still have mountains and mountains of incredibly poor people, even though they have an abundance of natural resources. But eventually, you'd think people would just give up on failed systems, but we just kind of try it one more time. So South Africa is circling the drain, at least for a while here, by Fitch. Other things going on. Oh, I wanted to get to it before I talk about this. That is that Disney was one of the other ones that stuck something into the document dump. Didn't really seem to matter much today. Let me get a quick quote on it just to make sure. But they quietly Wednesday night before the everybody went off to eat some turkey, were big on saying that they lost 2.5 million subs for ESPN over the last year. Stock's up 35 cents today, but this is always one of these things that you want to keep an eye on because you never exactly know when this thing is actually going to come. I'll guarantee you the people on the trading desk know all about it. They're just hoping that a lot of people in Disney stock probably forget about it if they're a retail investor. And again, you just don't know the cord cutters, how that's going to affect folks. But they actually pumped out. It was lower when I looked at it earlier, about 8:30 this morning. And they pumped out a lot of good news to try to counteract it, but just up 36 cents at the moment. We're at 2207 on the S&P cash, off 6 points, 2.16 billion shares. I had somebody ask me a question. I'm going to go into the next segment with this. But the question was why they don't hear me spending a lot of time on moving averages. And I wanted to kind of take a little deeper dive before we get into charts on this, mostly to answer that question. In fact, you can always email me at path@tfnn.com. And I can answer your question. Of course, you can always call 877-927-6648 or put a message in the den too. But what do we have going on? We've got moving averages. The question was, why don't I use them? There are 3 points to a moving average if anybody would use them. And that is the actual trend, noise, and seasonality. And the problem with just about everything in the stock market out there is that they're using moving averages. Now, the first part I will talk about and why I think it's almost silly. There are an average of 251 trading days a year. I think 2013 we had 249. I think you get like 248 to 253, depending on the way that things have popped around for a few days. So you've got that many trading days, but you're using a 200-day moving average. Well, that doesn't do me much good, because as I come into today, if I'm using a 200-day moving average, it doesn't even get in last Christmas. So I've got zero seasonality. All I have is some trend. I don't know how much of that trend can be pointed to seasonality. And without maybe some multiple years of data, I can't even figure how much of this noise, how much is this actually some kind of signal out here. So there are a bunch of problems with using moving averages. I sent back some links to my emailer about a few ways that they try to create, especially in business, try to fix this. There are a couple of versions of this stuff called ARMA, A-R-M-A, and ARIMA, A-M-I-R-A. But that's kind of the beginning of it. We'll talk about why moving averages tend to be out of phase about 90 degrees, why I like the 9-day and actually more a 6-day moving average, and why, when you have to fix this stuff, there are 2 ways to go. And I took the way less traveled. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, we were talking about technical analysis and moving averages. Moving average, once you get past a certain amount of days, ends up being nothing more than an out of phase of the actual signal that you're inputting. If you took a perfect sine wave and then you took a moving average of that sine wave, it would be perfectly 90 degrees out of phase. This is why a great deal of technical analysis uses oscillators. They try to look at when these two different phases of maybe two different moving averages actually come back in, and it vastly improves the way that moving averages are used. So there is a problem. It is inherent in all moving averages, why I don't really spend a lot of it. There is a ballistic nature to short-term averages in market, and that's where, if you go back and do a study, I've done studies over a number of years when I was looking at moving averages to begin with, and you find out that there's a little blip at 50, there's a little blip at 200, and guess what? Those things are about 1% better than a random flip of a coin. They're not that big out there. But what you do find out is that they're like shooting a gun at 45 degrees. There's a ballistic move, and it runs anywhere from about 6 days, although for the most part, after about 6 days, you've gotten 95% of what you would get out of a 9-day moving average. So you can use a 9-day, just sell early, sell often out of that. But there is a ballistic nature to that, no different than firing a gun off or a cannon. And that ballistic nature of stock pops and moves across different price ranges is fairly decent. So if you're talking about selling over a number of days, you can probably look at something else. Lastly, there is a difference in what you do to correct all this stuff. We talked about trend and seasonality and noise. There's two ways to really correct this. You can either put a filter on it, and there are a lot of different mathematical algorithms to try to figure out trend, noise, and seasonality to get you something that you can use. There's also something I do, and you'll hear me say, I've got my model. My model says that between now and the end of the year, we're looking at maybe 1% or 2% higher. There doesn't seem to be anything to really drive this market significantly higher before the end of the year. And mostly when you get into these kind of almost fugue states in the market where there isn't a lot happening, the same thing happens. And that is, if you are good enough to play whack-a-mole and you can find the stock with heavy short interest, you can probably bet that others on the street will find it, and they'll come up with a phony news article, a phony buyout, or just start buying stock until they make shorts run out into the end of the year and they no longer want to hold their shorts and they cover, and you have all those natural buyers out there. But I use models and filters. You can read about them, but for the most part, they all have kind of problems, just like being out of phase does. But we're going to talk more about this as volume decreases, and maybe there's a few less charts out here for us to look at each day. I'm going to talk more about the nuts and bolts of actually setting up trading systems and what you like and what you don't like. But for the most part, this gets us here. Where are we at here? I want to do go through some of what I've been looking at. And we'll just start off with a few of these. Again, you can give me a call at 877-927-6648. You can call me at 877-927-6648 or email me at path@tfnn.com. And I guess this is where I start repeating myself. Okay, let's take a look at here. I wanted to see how some of these stocks were reacting today. Some of these had come out here and made some triple tops. Auto at Home was one of these. The first high was August 16th, $27.20, 3.3 million shares. You get into that with half the volume on October 5th, 1.7 million shares. And then we get into Friday's half day with 1.1 million shares. And now, of course, we're pulling back on lighter volume. Again, this is not a good sign to pull the trigger short on any stock now, but it does start setting up a theme or a theory of trading that you can take into the beginning of the year, and that is as these stocks continue to move higher, especially in the last month of the year, you can see the volume coming out at these highs, and these ones that make 3, 4, or 5 attempts up to highs, and maybe even a couple more, and then hold above those highs. Normally what happens, we come back the first of the year, these things tuck right back into the trading range, and they go right back down to the bottom of that. In this case, this would be about, $29 back down to about $22. Not a bad trade out there when we take a look at it. Let's check other things like email. Okay. Avid, we've talked about this stock before. I didn't see a great deal of anything holding this up. In fact, we talked about how tough it is to be in the editing business. This is probably a couple of months ago. But my thought, and I actually remember having a discussion with the engineer at the same time, building systems out for video editing is probably a very rare thing anymore. In the olden days, Avid made software that ran on Macintoshes, that ran on a bunch of hard drives and was a nonlinear editor. But back then, you had to have very special hard drives, very special hardware. A lot of that going by the wave side. Much of the video production is either on the very high end or now on the very low end. There isn't a lot of mid-priced video editing going on, which was the bulk of Avid's business. This thing continues to move lower out here. I haven't looked at their finances, but I probably will over the next couple of weeks to see whether this thing can actually continue moving on. But for every sale that you see for NVIDIA that's using it for video compression, you can kind of say that NVIDIA is taking a big bite out of Avid for what they do. NVIDIA, I haven't looked at this in a while. Another huge bounce out of earnings on here. This thing's kind of getting ready to pull back to about the $73 level. My guess is this thing could kind of hold up in the $90 level and even hit $100 and then roll back over. That may be the end of the year. Not a lot of volume up here, a lot of days where this thing's just going sideways. The downside is that 90% of the time a stock hits $90, it's going to hit $100. So trying to pull the trigger short on this before it hits $100 is rather tough. And it's probably the strongest stock in the tech sector. Again, you know, they've got two things really going on for them. Video editing. Well, they've got games, but that really hadn't changed so much from last year. But it's video editing and machine learning, where these cards are really used for nothing that has to do with traditional video that you see on a screen. We'll talk more about this when we come back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And looking at GoDaddy out here, it tested a previous high on Friday with lighter volume. That volume came in with 300,000 shares compared to October 21st. $36.96 with 1.5 million shares. Tried to spike a little bit and has pulled back. Again, the energy back up from that November 4th low was not all that bad, but I would still be looking at 29.50 as the first point to look at that as a buy. Just kind of interesting that this company went public and then sold, just very interesting to see this thing and the way it trades. I was wondering when they changed their marketing appeal, that would change a great deal out there. It doesn't seem to have messed with it too much. Hasbro, this thing's been knocking at that door of $87 a few times. April 19th is the last time, 3.7 million shares. Got into that candle on July 12th with just 1 million shares. Back up here again on a nice pop on the 14th of November with 2 million shares. Hit and went above that high on Friday with this 418,000 shares and back into the trading range. This is probably not going to fall apart before Christmas does, but keep a close eye on this one because it looks like it's got a lot of air below it. And could easily get back down to these double gaps around 70 and 72 bucks. Love, another one out here, Southwest Airline. This thing's not showing any sign of really pulling back. Had some decent volume into the April 21st high. The gap down that kind of set this lower trading range goes back to December 8th of a year ago with 20,000 shares. This thing gap down. Huge energy, came back up, a little lighter energy out here. But again, I'm not a big fan of pulling the trigger short on these. But again, the lighter volume is something that comes into a theme. And why a lot of times we come back in January and see rapid down thrusts because there just wasn't, these rallies are just not built on a lot. But again, you kind of have to have a lot of patience out here. One of the bigger internet backbone companies, Level 3, this thing's been bouncing around the $57 level. July 13th, $57.59, 7.9 million shares got in to it with a huge spike of volume on October 31st. So you knew it was going to kind of come back up there and break it. Got back into it on November 22nd with 3.4 million shares, kind of still back under that line, and not a lot of volume as we approach that July 13th high. And, you'd probably like this thing to pull back to about 50 bucks. Maybe there's something else going on in that. New Park Resources. Don't know a lot about it. Let's just go on. Dave and Buster's. This thing gapped down on some decent energy going back to the, what is that, July 26, 1.5 million shares. Got into it with 2.5 million shares, but gapped down literally the next day on, what is that, September 7th. It's worked its way all the way down to 37.60. It's worked its way all the way back up. I've never understood the idea that this thing is going to become a lot more than it is now. Doesn't mean that it's not going to make money. I just don't see him doing a Starbucks or a Panera's Bread where there's one on every street corner, or in the case of Starbucks, a Starbucks literally opening up in another Starbucks. But could have been worse. Not a lot of volume again. This thing's probably just going to be in a trading range. I don't know if anything's physically changing in this business. But buying pizza and playing video games, I don't know. It just seems like a fairly finite business. Well, good one if you own the company. But it's no Starbucks, right? It's not going to be opening one on every corner. What else do we have out here? Memory business on some of these IPOs last year. This looks like this one's getting ready to go bankrupt. That's Violin Memory. I haven't looked at the numbers on it, but I just noticed this one come out. It's, about 80% of the IPOs kind of look like this over the last year. A great deal of these things were just wish they would work out kind of things. On the positive side, if you're looking at penny stocks out here, this one is kind of caught my eye, and this is Vanguard Natural Resources LLC, VNR. I love to see chart patterns where everything is just flat for a week or 2 weeks. I don't know enough about this one, but probably enough that I need to go figure out what's going on. Normally, when you go sideways this long, it's a good sign that either selling's gone or you actually have a fairly big buyer out there. VSTO, Vista Outdoor, kind of raising a little higher out here, but hasn't done much. WAC, Walter Investment Management Corporation. This thing's been looking at $6 as its resistance level since the gap down of May 3rd in 2016. 1.2 million shares on that day. You got into it with just 600,000 shares on October 28th. Just 370,000 shares on November 22nd. This thing's starting to fade back in. Again, going to be very tough to be short any of these, but what you would like to see in these is these things get really fat, like a Christmas goose, go up and continue on very light volume. I won't be shorting a $6 stock, but a good pattern to look at out there in stocks that are above $30 and hopefully doing the same thing. As we get back to the market, already in progress, 2.3 billion shares as we go through, so not a whole lot. We're off 7 points on the S&P cash. Take a look at this one, Waste Management. Waste Management, it's trying to make some new highs. Had a spike of July 5th of $69.61 with 4 million shares. We had 750,000 shares on Friday, so less than 1/4 the volume. Today, about 1 million shares, so a little bit more out here. But again, air getting pretty thin on these, and you don't want to be up here on these highs and hope the market does not turn against you. You want to be at lows with volume, with light volume, and maybe the stock breaks below it. But at least your risk reward is going to be much better than these. What else do we have? Wolverine Worldwide, WWW. This thing was August 19th at $25.47 with 1.3 million shares. Just hit that with 230,000 shares on Friday. Even the day before, we only had 500,000 shares. This thing's kind of pulled back down. So in a bigger trading range from about that to $20.58, which is the October 25th low out here. So we got a few of these. XXIA is a few others. Take a look at this. And not a whole lot in that one either. Now let's take a look at, out of time for this segment. We'll be back in a minute. I got a few more stocks to look at. We'll wrap up the day, but just look for the market probably to get exciting in the last 30 minutes of the day. Volume is fairly light so far, just 2.3 billion shares. So we may not get the 3.3 or 3.5 billion shares today. Maybe lucky to get over.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I had a question about Yelp and an ABC. And, you got a fairly nice setup out here for an ABC down, and a business that I think has a flawed business model to begin with. But again, I can't really say that I want to see or pull the trigger going short without kind of something on a signal in the markets, and I don't think we're getting that today. We're off 7.5 points on the S&P cash, but the volume is just 2.33 or 3.5 billion shares. So the volume is probably off, a week ago, 7-8 trading days ago, we would have had 1 billion more shares at this time. So certainly not coming off the high with any kind of sign of strength. Can we pull back to around 2,200? Yeah. That's 5-6 points lower. Does that really matter in the big scheme of things? I don't really think so. What you do want to watch is stocks like this that continue to have a lot of people shorting them. And you get in the last week before Christmas, and these things, sometimes you can get a couple of bucks out of them as shorts walk away. But you got to know where you are in the year, and to me, it's just awful long in the tooth to be looking at some of these out here for shorts. As I do look into the next year, I really am starting to look at some stocks that did blow up at about the right time, and now they're coming back, and some of their gaps are getting filled. Some stuff that could become real big ABC moves on the way down. Tractor Supply is one of these things that blew up, had a big gap down on the 8th of September. It's coming back and filling those. This one could come back into the $82 range, which I would just love if it continues to do it on next to light volume. That's going to set up kind of one of the better moves that you can have in this. Come on. We've got a 40% retracement right now. That doesn't do a great deal for you. You get into about, especially in this time, I want probably a 618. That's probably going to get us up into that 82 area. So I'll continue to keep an eye out on that. But, it's kind of tough to figure out exactly that there's anything big going on here before the end of the year. But these are the kind of stocks that I want to watch over the next couple of weeks and say, okay, light volume, nice move up into the end of the year. For this time, I'll be playing stocks that have way too many shorts in them for light volume going into Christmas. I will then flip on a dime and think, at the beginning of the year, how many of these stocks went up on no volume all the way into the Christmas, and then start looking at those to go short. So you always kind of have to be looking ahead in the markets. I don't know if there's a great deal out there to scream about yet, but a lot of stocks coming back up. Look like they're probably going to get back up into that 618 retracement area, maybe as high as 782. And they'll be up there on light volume the last couple of weeks of the year. Those are the ones to really look at as the low-hanging fruit. And if you do your work now, a lot of times you'll get paid very well at the first part of the year. But not all stocks are going to get universal love next year. Your job right now is to find the strongest and the weakest. And I think we're already starting to see a lot of light volume. So that means we're probably going to have more than our share of weak stocks going in to the 1st of January. In the meantime, sell when you can, not when you have to. And we will see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.